Nolan, thank you very much for joining us today. You and your team have been very busy in the past year realigning your portfolio and implementing many new initiatives to unlock value. But before we discuss these initiatives, I want to first start with clarifying the confusion around Sandstorm's deletion from the NYSE ARCA Gold Miners Index. And I want to discuss this because of the significant move that did happen and the number of shares that traded. Maybe you can just start by telling us what exactly happened.
Yeah, well, it certainly made for an interesting Monday for me. It was just an absolute surprise mistake that the people who calculate the index, they go through and every quarter they calculate which companies qualify for the index or not. And they just simply made a mathematical error and a surprise deletion of Sandstorm. And so we woke up to share price down 10% and trading tens of millions of shares and mass confusion about what was going on. And fortunately for us, we just simply walked them through the math and they reversed course. And Sandstorm, we're about 70% precious metals going to 80% precious metals. So whereas gold and silver focused as a company can be that's in the index. So that'll never happen again as long as they don't make the math error again.
That's a great explanation. Thank you, Nolan. I want to move on now. You have undertaken several initiatives to unlock value for shareholders, and I want to touch on these initiatives, which includes the formation of a new company called Horizon Copper, which includes the copper assets from Sandstorm. Why don't we just start with what the rationale was for starting this new company and spinning out these copper assets?
Yeah, there's really a twofold process to the logic of that. The first was, if you go back a couple of years ago, Sandstorm, one of our larger assets was an asset called Hod Maden, and it's gold and copper. And the form that we owned that asset in was 30% minority interest in the actual asset. And a lot of the feedback we were getting from shareholders was that, look, we understand that Hod Maden looks and feels like a stream in the sense that it's so high quality and it's going to cash flow so much and the operating costs are so low. The fact of the matter is it's not actually a stream, and we would like you to turn Sandstorm back into a pure play streaming and a royalty company only and go sell that asset and take back a stream. And so we had heard that feedback from virtually all of our investors, and we concurred and we decided we were going to do that. So that was step one. So we created this company, Horizon Copper. We sold off the Hod Maden direct ownership in the mine, and we took back a pure gold stream. So turned Sandstorm back into a pure play gold streaming and royalty company. So that was step one. Step two was we're a big believer that the green energy transition and the trillions of dollars of capital that's going to have to be spent to rebuild the world's infrastructure is going to create a massive worldwide deficit in copper production relative to the demand. Copper is used in production of electric vehicles and wind and solar and electrification of everything. And it just so happens that as the world builds all of these new copper mines, it's going to have to over the next 20 years, that some of the best gold byproduct streams that exist come from byproducts of copper mines. And so we thought, well, since we've already created step one, this Horizon thing to turn Sandstorm back into a pure play company, and it's sitting here in the office, why don't we have it go hunt for copper mines to buy? And Sandstorm Gold can be its exclusive buyer of streams and royalties on that gold byproduct. So really just the step two of the logic was it has the potential to be a really good source of Sandstorm buying more gold streams in the future.
And in addition to Hod Maden, what other copper assets does Horizon Copper own?
Yeah, so it owns two other assets. One is an NPI royalty on the Antamina copper mine in Peru, one of the largest and lowest cost copper mines in the world. And it owns a 25% stake in a company called Entree Resources, which has a 20% joint venture interest on the Oyu Tolgoi copper mine in Mongolia.
And what percentage of Horizon Copper does Sandstorm own?
So Sandstorm owns 34%, and that's the absolute cap that we'll ever go above. So the way it works is as long as we own 30% of Horizon, we have a contractual right of first refusal for any streams and royalties they do. So they have to come to us and can't phone our competitors. They can't phone the Franco-Nevadas as long as we maintain that equity interest. If we dip below 30%, then they can go and offer the streams and royalties to our competitors.
And when you said Horizon Copper is going to focus more on the energy transition theme, in addition to copper, will it also look at other metals such as lithium?
No, it's going to focus solely on things, specifically focus on copper and not just copper, but specifically copper in situations where there is a strong gold byproduct, so that Sandstorm can buy the gold stream and gold royalty to help them acquire the mine.
Nolan, Sandstorm produced 82,000 ounces in 2022, and guidance for 2023 is 95,000 ounces. And this will grow to 125,000 ounces in the subsequent years. And I want to touch on two of your development projects, both of which will have a meaningful impact on the growth in production, beginning with Greenstone. What's the latest on Greenstone? Where is it in terms of its construction? And when it is completed, what will this mean to Sandstorm?
Yeah, so Sandstorm has a number of assets in construction or going into construction. Greenstone is sort of the next one that will be complete construction, if you will. And it's being built by Equinox. It's a very large, high quality, should be a low cost mine in a good jurisdiction. We've got a stream on it. It's a very long life asset. And what I'm hearing the latest is they're on track to be complete construction and commissioning everything in commercial production next year. I'm told they're about somewhere between 70 to 80% complete construction of the mine already. So they're just putting the finishing touches on.
And the second asset I want to touch on is Ivanhoe's plant Reef. Why don't you provide an update on this asset and what it will mean to Sandstorm when in full production?
Yeah, so there's two phases to that. The first phase, over the next few years, we'll start getting a small amount of cash flow, kind of $3 to $5 million a year. But then there's a second part where they're planning on pulling forward development and massively expanding the capacity and daily processing rate of the mine 4 or 5-fold. And so that'll take probably another 5 years to get to the final full phase of that. But once that's complete, Sandstorm should be getting $20 to $25 million a year, every year of cash flow just from that Plat Reef mine that Ivanhoe is building and operating. So and it's a multi-decade, very long life, very low cost mine. So it'll become kind of one of our anchor assets once it's fully up and running.
And you mentioned that there's a number of other development projects within your portfolio, but is there another one that you would like to highlight that that is getting close to production and that will have a meaningful impact in terms of your geos?
Yeah, over the next few years, the Robertson mine that Barrick is building is something that will give us a significant amount of cash flow. And then our largest development asset, Hod Maden, that one should be up and running over the next 3.5 years. I think 2027 is a projected start date for that now. A company called SSR Mining actually just came in and bought a 40% interest and they became the project operator just over the last few months here, and they're pushing it forward now.
Nolan, I want to move on now and discuss your capital allocation. Sandstorm took on some debt in 2022 when it acquired Nomad and Base Corp. How will you allocate capital in the coming year? Will you focus on paying down this debt, or will you return capital to shareholders in the form of higher dividends or buybacks?
Yeah, so when we initially did those transactions, we did prioritize trying to minimize dilution. So we took on quite a bit of debt. And between the debt that we took on for the transactions, plus when we acquired Nomad as one of those transactions, Nomad owed about $150 million on stream payments that they had not yet paid. And so between those two is about $625 million US of effective debt that we took on, which was a lot for us. So we've been focusing all of our cash on debt repayment. We did a small equity financing just under a year ago. And then we've been taking all of our free cash flow and putting it against that. So we've already paid that down to about $465 million as of today. So it's come down substantially in a very short period of time. And we have a huge amount of cash flow that's starting to come in as our production goes up. So we're just prioritizing taking down that debt. We have allocated a little bit of capital, call it $15 million to a couple new small deals. Nothing significant of note there. And then over the last month, there's been some real share price softness in Sandstorm shares as some of the people that inherited shares in the Nomad deal sold about $100 million worth of shares of us just in the last 6 weeks and caused some share price softness. So we stepped into the market. We bought back about 2 million shares over the last 4 weeks. So that's kind of been our capital allocation. Going forward, it'll be the same thing. We'll just keep paying down debt. I keep getting lots of questions about what new deals are you going to do, but I think we're just going to stick to our knitting and keep paying down debt. We've bought over $1 billion worth of new things in the last year, and we're just going to let that mature and those mines get into production.
Nolan, I'm glad you brought up the fact that you were buying back stock earlier this year. But what about when we saw the mistake made by the index manager of the ETF and the stock got hit relatively hard? Were you and your team active buying back stock then?
Yeah, it's one of the benefits of having a share buyback plan in place. We were able to phone up the bankers that morning. We saw our share price down 10%, and we phoned them up and said, buy back the maximum daily amount, which in our case is 630,000 shares. So we bought back 630,000 shares that day, down 10%. And then the index reversed course and our share price shot up 10%, and it turned out to be a good opportunistic buy for us.
Good for you, not so good for the sellers.
Unfortunately, yes.
Nolan, I want to move on now and discuss valuation. You are trading at a below average NAV multiple compared to where you were trading in the past. And I just want to know what you and your team will do to realign this valuation in the coming months.
Yeah, that's a great question. If you go back a year and you look at our mid-cap peers, the Cisco's and the triple flag, Sandstorm is trading at a higher price to net asset multiple than triple flag and a higher price asset multiple than a Cisco. If you fast forward to today, we're trading at a dramatically lower number than them. And so what's changed? We issued a lot of shares in those $1 billion worth of transactions. And even though they were accretive transactions to our net asset value per share, sometimes people forget that in the short term, share price is determined based on supply demand fundamentals of that share price. If you create extra supply, it takes time for those shares to find their way into strong longer term hands. So when we bought Nomad, for example, one of their shareholders was Yamana. They got $50 million for the Sandstorm stock. Well, 5 weeks ago, there's no reason why Yamana needs to own Sandstorm. And so they sold that $50 million worth of stock and it put downward share pressure on our price. Company called Glencore got $50 million of our stock 6 weeks ago. They're not natural shareholders of Sandstorm. And so it's taking time for those shares to find their way into fundamental, longer term institutional investors. And so when you issue shares and stuff like that, it's a CEO's job to get on airplanes and travel around the world and go meet face to face with those institutional investors and tell them the story. I was in London a week and a half ago. I was in Toronto yesterday. I'll be in New York and Toronto next week. And sitting down, it's actually very encouraging for me to see how well the Sandstorm story is resonating with huge multi-billion-dollar pension plans and funds. They just go, this Sandstorm is a completely transformed Sandstorm from the one before, and now sort of fits the profile of adding into high-quality portfolios, and that story is starting to resonate. And I've gotten, again, name names, but specific feedback on a handful of multi-billion-dollar funds that have started slowly buying Sandstorm shares, and I think they'll continue to do it for a long period of time. So I think the share price weakness is behind us, and hopefully we'll start reversing that trading effect as there's no new supply of shares, and in fact, a reduction in supply in shares because we're buying back shares, and then I'll be out there creating demand for them.
And how would you define these buyers or these investors that are showing an interest in your stock? Are they generalists or are they more focused on the precious metal space?
I would say 80% of them are generalists, actually. It's one of the things that the royalty and streaming model really appeals to, because if you're a generalist investor and you're investing in technology and biotech and manufacturing, all these types of things, you can't be an expert in every industry. And mining is a risky thing to invest in. And if you're not an expert in it, you don't have technical knowledge, you can blow yourself up real bad by investing in the wrong mining company when there are technical mistakes. And so generalists really like to, if they decide to add gold exposure, do it by adding a streaming or royalty company. Historically, Sandstorm's just been too small and our portfolio has been too immature to really be of substantial size enough to have a large generalist investor be able to invest in Sandstorm. But previously, we were just kind of too small and too illiquid if you go back 6, 7, 8 years ago. But today, telling this new story of Sandstorm for the first time when I'm out on the road, and they look at the size, the scale, the liquidity, the stability, the diversification, it's a story that they're going, yeah, this makes sense. I'll add it to the portfolio. So hopefully that continues.
Nolan, as we wrap up, there's a lot happening at Sandstorm. Maybe you can just summarize for us what you and your team will do in the second half of the year.
Yeah, unfortunately, the theme for Sandstorm for the next year or so is boring is the new sexy. We're just going to sit here and pay down our debt and tell the story. And that's what's on tap for us.
And just to summarize again, what cities are you going to visit in the coming weeks?
Toronto, New York. I was just in London, and then we'll pick the next cities after that.
Nolan, that was a great update on what's happening at Sandstorm, and I want to thank you very much for spending time with us today, and I look forward to our next update.
Thank you. I appreciate it.